Our big story of the day, the December jobs report coming in hotter than expected, with growth in government, healthcare, and social assistance construction leading the way. So how is this translating to employee sentiment? Well, for that, we want to bring in Daniel Zhao. He's Glassdoor's lead economist. Daniel, it's great to have you here on set with us. Let's talk about the numbers that we saw in this jobs report. Yes, that headline number was strong, but there were certainly some data points to be a bit concerned about. Labor force participation slipping just a bit. How does this compare to what you're seeing on your platform?
Well, yes, I do think that the jobs report is actually a little bit of a mixed bag under the hood. We saw payroll growth was very strong, but labor force participation came down a little bit. Employment from the household survey came down a little bit. On the flip side, we are seeing on our platform that employee sentiment is starting to pick up. It's increased for the third straight month in December. It's still down significantly compared to where it was a year ago, but hopefully that gives us a little bit of optimism heading into the new year, that employees are feeling a little bit more comfortable about their job security and the risks of a recession in the new year.
And I guess maybe just take a step back. How do you guys kind of calculate that employee confidence? And then maybe when you look as an economist at just kind of the setup of the headline numbers from the labor market, how does that, what is that employee confidence indicating relative to kind of those more mainstream data sets, let's call them?
Yes, so employee confidence, we basically just ask employees like how confident they're feeling about the business outlook for their employers over the next 6 months. And then we do some calculations. We
make sure differential, good versus bad kind of thing?
Yeah, essentially, right. And so when we look at that data, really what we want to get a sense of is there's these business confidence measures, consumer confidence measures, but how are employees feeling? Because they have a pretty good pulse on how businesses are actually doing. And when we look at that data, we think that it signals a few different things. It signals how those businesses might be doing financially, for example, but it also might tie into other labor market indicators like the quits rate. Because if you're feeling particularly good about your employer, well, you might not want to quit. And conversely, if you feel really good about the economy, but not so good about your employer, you might decide to quit to look for a better opportunity.
Dana, when we talk about who has the upper hand right now, we talked for so long that it was the employees throughout the pandemic, given the fact of the situation that we were in. Has that now reversed? And I guess in terms of that smaller headcount that we've heard so many business leaders talk about over the last several quarters, when they talk about more reliance on efficiency, looking to streamline their business, what impact then does that have to the employee?
Mm-hmm. Well, I don't think it's fully reversed. I think that the labor market is still fairly hot, but it's definitely more on a case-by-case basis now, right? So this isn't 2021, 2022 where you could throw a stone and find a job opening, right? So
for a 20% raise.
Right. So for now, it's a little bit more. Job seekers have to do a little bit more research to find those industries or those parts of the industries that are still hiring, that are still looking for workers, and you probably aren't getting quite the same raise that you would get just a few years ago. But at the same time, this is still a fairly strong labor market. Unemployment is still low. There are still those opportunities out there. It's just a little bit more selective.
I'm curious how you think about, again, working at a firm like Glassdoor, and we see, LinkedIn has an economist team, Indeed. How you think about the JOLTS report in the context of the work that you guys all do, looking at your own platforms, because it doesn't come up too often, but every so often there's well, are we sure we know how many jobs are really open, all this kind of stuff? I'm just curious how you think through that, the way the BLS adjusts it, what you guys see on your platform, and what that data set's been telling us about the labor market.
Well, the BLS does absolutely fantastic work. They are really the gold standard in understanding what's going on in the labor market, and we like to think of ourselves as providing supplementary data, right? We can provide a view into maybe how employees are feeling, or maybe some of the things that they're talking about in their reviews that you can't really get from just a plain old survey, right? And so we're hoping that can provide a little bit of additional context to those BLS numbers, but we're definitely not trying to replace them or anything.
Dana, what are you seeing just from a skills shortage standpoint? That was a story that we had talked about for so long, kind of getting buried at this point.
Throwback.
It's
2017
but I bring this up though just because of the productivity issues, or I should say concerns going into it with the development of AI, exactly what impact that's going to have on the workforce. Is that further exacerbating maybe the shortage that we had going back a couple of years?
I think the skills shortage narrative, it tends to be a little bit overblown in the sense that a lot of people underestimate how transferable their skills are. And certainly as we're talking about kind of what skills are going to be important in the future, I think soft skills are still going to be extremely important. It's not just about having a STEM degree nowadays. Those soft skills will still be important. That person-to-person interaction, I don't think that AI is really going to fully replace. So I think that those are skills that are applicable across industries. And even those hard skills too, I think a lot of people say oh, tech is going through this slowdown, but those tech skills are just as valuable in healthcare or in finance or in other industries where hiring might be a little bit more stable.
Another win for the liberal arts. We'd love to see
Huge
it.
win.
Love to see it on this program. All right, Daniel Zhao, Glassdoor's lead economist. Thanks so much for stopping by.
Thanks.